Hey everybody, Mike Lieberman with Advisors Capital Management. First 10-second interview show of 2024. Thanks for being with us. I am here with a couple of TikTok dudes. It's a TikTok world. We got to move quickly. People do not have the attention span. Kevin Strauss, Kevin Kelly, fixed income specialist. We're talking about money market funds. There is $5.9 trillion stacked up in money market funds. People were afraid of markets. People were afraid of being vested, and money markets have yields. Kevin Strauss, I throw to you, first question, 10 seconds to answer. What does the money market party look like, and is it over?
Well, I think these 5% yields that investors have been achieving is about to end. The Federal Reserve is saying they're going to start cutting rates. So those are going to start going down and could go down very quickly and very soon.
Kevin Kelly, I would think the market is forward-looking in that yields would start to move before the Fed does anything. Is it too late to make changes?
The market did start to look with the Fed, and rates did go down. It's not too late, but you can't wait too long because the Fed's saying 3 cuts by the end of next year. The market's predicting 6, so it's not too late, but you got to move.
Kevin Strauss, what does gotta move mean? So what does a conservative investor, somebody who had money in money markets, isn't looking to take equity risk? This is their investable money, but it's sort of their preservation money. What do you do to extend yield? I mean, how do you drive yield?
Yeah, you need to go out a little further and try to lock in these good yields for a longer period of time. So some sort of investment grade fixed income portfolio with a 3 or 4 year duration can help you achieve 5% plus yields versus the closer to 3.5 you're going to get if you sit in money markets for the next 4 years.
So pushing on fixed income higher for longer in terms of income generated. Kevin Kelly, it's now beginning of 2024. If you had to guess, if a money market is yielding 5% right now, by the end of 2024, what would that same money market fund, if things go the way the Fed wants them to, what would that same money market fund be yielding?
So yeah, if the Fed's right, it's about 4.25 or less. If the market's right, it's 3.5 or less.
Okay, staying with you, Kevin Kelly. Push out even another year, 2025. If the Fed keeps going at that pace, a money market fund would yield what?
Low 3s if the Fed's right. The market, it's hard, doesn't try to overly predict that far out, but you're talking sub 3.5.
Okay, so 5% today, 2 years if projections work out, sub 3.5. With that, right, fantastic. You guys crushed it. 10 seconds, you answered every question. It goes to show you that money markets, we don't really know about going forward, right? Yields won't be as great as they've been, and maybe it's time to think about making changes. If you're an advisor, talk about that with your client. Other than that, it's not too late to make changes, so certainly an interesting conversation. Thank you guys for being with us. Thanks to everyone. We'll keep coming at you with timely topics as long as they are interesting. Thanks, everybody.